This is my week ahead from 28th of April to 1 May 2026. And this week, FOMC sits right in the middle of it all. The question is simple. Will Nasdaq hold these all-time highs, or is the bull trap already set? Stay with me, I'll cover everything. Welcome to the Displacement Diary, documenting my trading journey, one trade at a time. Here is what I'm covering today, and I would encourage you to stay to the end because the weekly playbook at the close is where everything connects together. So I cover the market context, which is SMT Divergence, the dollar and indices correlation is correct, and then most importantly, the end of month premium week risk. Then the news calendar with FOMC on Wednesday, no news on Monday, and then 3 red folders on Thursday. That's the full picture. And then number 3, the US dollar monthly, weekly, and daily bearish bias, including the discount targets for that instrument. Number 4, Nasdaq analysis, monthly all the way to the daily, with a bullish bias but with caution. Price is now on the second quadrant of the FIB projections, and I'll show you the levels that I'm plotting. Number 5, a weekly playbook for my day-to-day game plan. And finally, the FTMO 100K challenge phase 2 progress. Before I go into any individual chart, I need to flag 4 things that are shaping my entire view of the week. So first, SMT divergence. So Nasdaq made a higher high and SPX. Dow Jones failed to do that, and that is a cause for concern to call for caution around sizing. And then the US dollar index against the indices, the correlation is correct. NQ SPX made higher high, and this is failed to make a lower low, and that is not normal. So risk management is important. Thirdly, the month of April, it's possible to anticipate a premium week as the month closes. So a counter trend move is not uncommon. And then geopolitics, the Iran tensions. If Trump makes a tweet, expect volatility immediately within the market. The calendar this week is front-loaded with calm and backloaded with explosive potential. So Monday, no news, but anticipate pre-FOMC institutional positioning. So the market is likely to move. Tuesday, medium news. Wednesday, that's the big one with FOMC. I'm not going to trade 30 minutes either side of FOMC. There's going to be a lot of volatility. And Thursday, 3 red folders. Treat that as continuation of the Wednesday energy. And then Friday, medium news folders, and the month would have closed. So counter trend moves could be expected. Let's look at the dollar. The bias is bearish across all 3 time frames, monthly, weekly, and daily. So the monthly is showing bearishness, continuation. And then the weekly, this volume imbalance has been respected by price there. And that's confirmation of bearishness. Then going on to the daily, price has respected that volume imbalance, which is that one. The low of that volume imbalance has been respected, and the market has created a swing high. So I'm looking at price going down, and preferably if it lays a body across the 50% fib and across this volume imbalance, which is that one, then that's confirmation of price moving lower to the lower quadrant there. If price goes up, I'm looking at price not closing above that 25% fib line. So that is what I'm looking at on the dollar. So moving to Nasdaq, the bias is bullish, but with a caution attached to it. So the monthly has clearly closed above the relative equal highs, which is a quite strong bullish momentum. And then on the weekly, I've graded the Q1, Q2 up to Q4 quadrants for you to see that easily. And you can see price has clearly closed above the 125% fib projection and making its way to the 150, which is the half standard deviation. And the area that I'm focusing on is clearly marked here on the chart. So the market also created this bullish fair value gap, and I'm looking at this not being visited to confirm a higher NQ. And on Monday or early in the week, if price comes to retest this, I'm expecting that we should not have a body across the 112.5% fib. Anybody laid across that invalidates the strong bullish momentum, and the support that kills everything, the support levels, is revisiting this volume imbalance and this bullish suspension block. So that's Nasdaq there. Now, this is NQ daily, and on the right, the weekly for higher time frame view. But I'm still bullish on the daily, NQ daily, but in the caution zone. What gives me confidence is that last week the price was efficiently delivered. There are no fair value gaps or volume imbalances left, and that is confirmation of bullishness. Also, price worked its way from the lower quadrant to the second quadrant and laid a body across the 125%, and that is confirmation of bullishness. So we are now in the lower quadrant of the second quadrant, which is the discount layer, and I anticipate price working its way to the premium of Q2, which is that upper half. And the critical level to watch is the 137.5% fib there, which is the transition between the discount area and the premium. So price would work its way all the way to the half standard deviation. I will allow for a discount Judah swing working its way to the 125% and then going up. That will be confirmation of bullishness. However, if the Judah swing extends all the way to the 112.5% and this new week opening gap, which is last week's one, that is cause for concern, and it invalidates my bullish bias. So that is Nasdaq daily for you. Now the playbook day by day. Monday, no news, pre-FOMC positioning. The higher time frame bias sets the direction. Last week of April, for that month, watching for that monthly premium Judah swing, only high quality setups, 1:2 minimum risk to reward ratio. And Tuesday, ADP at 8:15 can create early volatility. Watch the reaction at FIB 137.5% on NQ. That's pre-FOMC ranges being built, and avoid over trading, protect the buffer. And then Wednesday, FOMC. I cannot stress this enough. I am not in a trade 30 minutes before or after 2 p.m. Eastern. I wait for the displacement, I wait for the institutional response, I enter only on clear directional confirmation. This is not a day to be a hero. Then moving on to Thursday, red folders clustered at 8:30 Eastern. I'll treat this as FOMC continuation energy. Wait for the structure to settle. Look for liquidity runs at any news spikes. Discipline over emotion. 1:2 risk reward minimum. Stand aside on FOMC and protect the buffer. So before I go, the mindset I am carrying into this week is be so disciplined that results become inevitable. That's the standard. And my goal for next week is to protect and grow my buffer. Look for minimum risk reward of 1:2 on every trade. Don't rush it. No risky trades. Patience is the edge. And finally, the progress on my FTMO 100K funded challenge, phase 2. So balance is 92.2K. Maximum drawdown limit 90K. So that gives me 2.2K buffer, which is the distance between the lower watermark and my balance. And the profit target is 105K. So I still have to make 12.7K to pass phase 2. That is the week ahead for me. Process over outcome. See you in the next session. If you liked this, subscribe, like, and send any comments on the channel.